Welcome back for another Fetch AI price prediction analysis video, and in this video I will be sharing areas that Fetch AI needs to continue holding above in the next coming hours, give you areas of resistances that you also need to see a break above, and also share out my long-term Elliot wave analysis that I'm expecting to play out once the bull market is here. And at the time of this recording, Fetch AI is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. We are also holding above a significant area of support at around the $0.39 mark, which is also acting as support for us to continue gearing up. And the next key area of resistance that we need to see a break above lies at around the $0.45 mark, which is the next key area of resistance that we need to see a break above, flip it into support for us to continue gearing up and possibly get above the $0.5 mark in the next coming days. Fetch AI has also continued to obey the Elliot wave structures, and zooming out on the charts, you can see that after getting our low on the 17th of August, at around the $0.1618 mark, we saw that push to the upper side, giving us a high above the $0.27 mark, completing the formation of this wave 1 to the upper side. Then we started a corrective structure in the formation of this wave 2, giving us a pullback into the minimum target area for the second wave, fully maximized the target area. Then we started this push to the upper side in the formation of this wave 3, whose minimum target areas we have also fully maximized, and I gave you the areas by connecting the trend-based Fibonacci from the low of the first wave to the high of the wave 1, then dragging the fibs to the low of the second wave. And the minimum target area lies at the fib level 1.618, and that is at around the $0.3872 mark, which is an area that we fully maximized. We saw a bit of a pullback in the formation of this wave 4, and there are high chances that we are still in the formation of this wave 5, since we have not yet fully maximized the minimum target areas for the wave 5 at the fib level 0.618, and that is above the $0.4631 mark. And as a result of this is now suggesting two scenarios that can play out here on the Fetch AI chart in the next coming hours. Having the first scenario is where we can see Fetch AI continue gearing up, see a break above resistance, and fully maximize minimum target areas at around the $0.46 mark, and possibly see even higher prices, maybe to the area at around the $0.5 mark. And in case such a movement plays out, then we can term this 5-wave structure that I have over here as an Elliot wave, count 1 to the upper side. And from that point, we can expect a bit of a pullback in the formation of this wave 2. The alternative scenario is that there are high chances that we now have a high in place in the formation of this wave 5, and we have now completed the formation of this larger Elliot wave count 1. And given that now the market sentiment has started to shift, pointing to the downside, there are high chances that we can also expect such a movement here on the Fetch AI chart, suggesting that in the next coming hours we are going to see a bit of a pullback in the formation of this wave 2. And once you have a low in place for the second wave, we can expect another explosive move to the upper side in the formation of this wave 3. And the minimum target areas for the second wave can be given using the Fibonacci's, connecting the Fibonacci's from the low of the first wave down there to the high of that wave 1, giving me a minimum pullback target area between the fib level 0.382 and the fib level 0.618, and that is between the $0.3431 mark and the $0.2748 mark, which is the area that I have highlighted on the charts using this red target area. But before we get into that target area, there are key areas of support that we need to keep our eyes on, and the first one lies at around the $0.39 mark. In case we lose that, then expect further pullback into the next key area of support at around the $0.33 mark. And in case we see a pullback into that area, then that means that we have managed to get into our minimum pullback target area over here for the second wave, and there are chances that we can see a reaction to that and start an impulsive move to the upper side in the formation of that wave 3. But in case we lose the $0.33 mark, expect further pullback to the $0.3 mark, where we have our next key areas of support. So those are the areas that we need to keep our eyes on in case a pullback plays out. Zooming out on the charts now to give you my long-term Elliot wave analysis, you can see that fetch.ai gave us a low back in 2020 at around the $0.0525 mark before we peaked in a 5-wave structure over here, giving us a high above the $0.61 mark, completing the formation of these Elliot wave count 1 to the upper side. Then we started a corrective structure in the formation of this wave 2 in a move that gave us a pullback into the minimum target area highlighted on the charts using this red target area, which is an area that we have fully maximized, and there are high chances that in the next coming weeks we are now going to see an impulsive move in the formation of this wave 3. Minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area for the third wave at the fib level 1.618, and that is above the $1 mark, which is the minimum that we can expect fetch.ai to do in the formation of that wave 3. So that is what I'm keeping my eyes on the short term and also on the long term on the fetch.ai chart. And I hope that video was of much help to you, and I hope to catch you in the next one.